We've seen major volatility within the commodity space of late, and for good reason. Certainly the gains seen for silver have really caught the eye. We've also seen particular strength for gold, copper, and some others. However, whilst we've seen a pullback in some of those, certainly around the announcement of Kevin Walsh, the underlying story for many of these commodities does still remain in play. And I particularly wanted to look at the case for copper going forward as we head into a period where we're likely to see a shortfall in terms of supply. And as we're seeing over the course of this week, different countries really trying to grab as much as they can while it's available. So here are the sort of big ticket stories associated with this. Essentially, you've got on the US side of things, the approval of the $12 billion critical minerals stockpile that Donald Trump is calling Project Vault. Now, what is in Project Vault? Copper is part of that, but there are other materials. Most notably, if you think about the trade relations between the US and China, that breakdown in trade relations and the standoff that ultimately saw the position of strength go from Trump, who thought he had the position of strength owing to the trade surplus that the Chinese have over the US. Suddenly he's in a position of weakness. And why was that? That was rare earth minerals. So rare earth metals, that's going to be a key part of it as well, alongside a handful of other materials. Now, key to this, I think, is really interesting here. This is essentially the US trying to become more like the Chinese. The Chinese, for their faults, have a particular strength, and that is the centralization of government, the centralization of planning, the centralization of the economic output and efforts of their businesses. That comes to a benefit. Also, the fact that they're not necessarily constantly in a cycle where leaders are trying to take decisions over a short-term basis to win a midterm election or the next general election, that also allows them to plan a lot further down the line. You might say they're lucky to be in a position where they have all of these rare earth materials, but also bear in mind the Chinese have been going around the world for years now, developing relationships. If you go to Sri Lanka, they've got a whole port that's built by the Chinese. You go around Africa, you've got countries that are very much intertwined with the Chinese. So they have been going out there, talking to countries that have these materials and creating this network, this web of supply to go into China. So this is something they've been planning for. The US are kind of waking up to it now. And this $12 billion critical minerals stockpile is the US effort to try and do what the Chinese have been doing for quite a while now. And essentially, when you're looking at the build out in terms of data centers, the electrification process, the EVs that are going to be created, the robots that are apparently going to be living in all of our houses, all of this takes electricity. All of this takes copper in particular. And so there's an expectation that we see a major squeeze in terms of the need for that copper. Now, one of the deals that we've seen just this week is the deal between, they call it the Trump administration. Essentially, there's a government-backed fund have agreed to buy a 40% stake in two Congo mines owned by Glencore. This is essentially their copper business, and I think there's one other material in there as well. So you're now starting to see these deals take place on a company by company basis to try and source this material. Then if you look at sort of what's included in this Project Vault, many people have just sort of named a couple of the headline names. So you could say here at the bottom, you can see rare earths, lithium, uranium, and copper. There's actually quite a lot of them. It's on their website. This is, so essentially, this is my trimmed down version of it. You can look on the Federal Register, which shows you it. And essentially, these are the sort of normal materials. The rest of them, by and large, are rare earth. So you have the rare earth, and then you've got aluminium, copper, lead, lithium, nickel, palladium, platinum, silver, tin, titanium, uranium, and zinc. So certainly this feeds into the narrative around precious metals as well. because not only do you have the stockpiling of gold, for example, by central banks, and therefore silver plays catch up, which we have seen recently. We're also seeing silver, platinum, palladium being perceived as these key commodities that need to be stockpiled by the US and most likely have been by the Chinese as well. This was a headline that I saw yesterday with Bloomberg: China to expand their strategic copper inventories after prices rally. China, the world's largest consumer of industrial metals, is likely or looking to expand its copper inventories to secure supply after the strategic metal surged to record highs. The country will explore ways to work with key owned smelters to boost commercial inventories, blah, 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 blah. They already maintain strategic stockpiles of commodities such as copper, oil, and cobalt. So bearing in mind, they've already been at this, right? This is a new move from the US. Yes, it's not a new move for the rest of them, because essentially we're in a position where, sorry, it's a new move for the US. It's not a new move for the Chinese, because they've already been thinking very strategically for a while now. And certainly they've been very much reliant on the manufacturing sector to a degree that the US hasn't been. Now that the US are trying to bring manufacturing back home, of course, they now realize what it takes to manufacture these goods. And so this is going to be a material that is going to be really at the forefront of this push. In terms of when this is going to play out, you can see here that we're kind of in this period at the moment where we are kind of still in surplus. So the squeeze on supply kind of hasn't really started yet. But what I would say is that as you look in terms of global demand and then global supply and the chart in front of you, when we see that deficit come into play and when we see it start to grow, you have to also bear in mind that when you're seeing the Chinese outlining the potential for them to buy more, to stockpile, and you're looking at the US to potentially start to build up stockpiles of this, it provides further near-term demand that perhaps hasn't been priced in here. So you start to potentially see it move soon, but from the longer term perspective, you're seeing the possibility that we see things really pick up and that this could be a major theme for the years to come. I just wanted to show you a few sort of ways of highlighting the same kind of thing. Really, this is from the analytical side of Bloomberg NEF. They are pointing towards this sort of over or undersupplied market essentially coming into play, particularly in 2028, but also a little bit for next year as well. Like I said, some of that demand could be pulled forward with these strategic stockpiles for the US and for China as well. And then you have this breakdown that I thought was particularly interesting in terms of demand supply. Now, we don't necessarily know whether they're going to be able to try and keep up with it. I think it's difficult to really maintain or to build the kind of increase in supply that might keep up with that rise in terms of demand. But if you're looking at the area that could potentially pick up, this chart I found interesting because it's pointing towards the pickup, yes, being in some of the countries in question, but also recycling could become a key part of it. That also is a part of the rare earth story as well, that you need to be able to recycle it. You can't, for this amount of new demand, just expect them to be able to extract it out the ground. Crucially, for mining companies, the US are looking to put a floor under some of these prices for these goods. That's been one of the problems with the rare earth sector, that they're not particularly valued highly. So there's very little desire for private companies to go out and start drilling just to take up rare earth. Maybe they'll take some as part of their mining operations for something valuable like gold. But really, you need to create an environment where businesses are built on the idea of essentially mining rare earths, which isn't really massively the case at the moment in the West. So in terms of what to look out for, here's an interesting chart that I thought I would show you. First and foremost, this is a monthly chart, and it shows you three different commodities in relation to the S&P 500. So the ratio between gold and the S&P 500, let's expand that out, which I believe goes like that. There you go. So look at that. It's just lovely, right? This big bottoming pattern, which now points towards a potential outperformance for gold. You can see it goes through these big waves, right? That looks like a bottom for me. That points towards a potential outperformance for gold against the S&P 500 going forward. There's justification for this. Of course, you've got some question marks about how Kevin Walsh might try to shake things up. But the fact of the matter is that the US debt remains well above their GDP. I think they're 120% debt to GDP ratio. Their debt essentially grows by $1 trillion every year. The ability to suddenly just decide, I've decided I don't want the US to have a debt problem all of a sudden. On the positive side of thing, you might say that, his strategy will be to create really significant growth. But I think they have to have pretty rampant growth to be able to actually turn around this boat. And so that really favors gold and points towards instability for the S&P 500. I also think that if you look at some of the sort of goings on within markets over the course of the past 24 hours, really there has been a theme around how AI, we saw from Anthropic coming out with a new tool aimed at the legal sector. AI essentially could create value, no doubt, but it also can put many businesses out of action because a lot of their products that are very expensive can be done relatively cheaply nowadays. So I think there's going to be significant disruption. And just to say AI is going to create a lot of value, therefore the S&P 500 is going to go up as it always has, kind of is missing the point, because I think there's likely to be as many losers as there are winners, and probably the winners will be very concentrated in nature, and the losers will be pretty significant in size. And then suddenly you start looking at increased unemployment, things like that. So I do expect to see outperformance for gold going forward, as this chart points towards. Then you've got silver, which follows on from that. So you've got that, I think it was more delayed in terms of the breakout, right? That breakthrough resistance only taking place in December. You've seen this massive ramp up of late. But, if you're talking about, is this the top for silver? Well, I don't necessarily think so. And I think this really points towards that. This outperformance for silver against the S&P 500, I think, can continue. And finally, let's just look at copper, which is why I think it's an interesting one. We haven't seen that breakout. We've seen it continuing on this downward trajectory. I think at some point we do see that breakout. Remember, look at those charts where it was talking about 2027 potentially being the point where we see the deficit coming into play in terms of supply demand dynamics. So it might be a little bit of a longer wait potentially, but then you've also got this nearer term stockpiling that's happening, and therefore that builds a potential bullish narrative, and people like to get ahead of the trend. So rather than it just being a case of pricing according to the supply demand dynamic within the market, you've also got speculation, which could potentially see it bottom out earlier. If you're looking in terms of the chart itself, you can see from a long-term perspective, we've hit record highs, but we saw that volatility at the back end of last week with that peak and that sharp decline coming into this week. And now essentially, what we're seeing at the moment is trying to find some stability, kind of like what we've seen in terms of gold and silver. And so we're regaining some ground. We're pulling back a little bit here. Some people say, oh, have we topped out? Has it got too expensive? I think it's a case of probably trying to see whether we sort of stabilize here to form a new base before we start to push higher, because of course you've got this sort of zone up here, and then you've got this zone down here. And so by and large, we're at the top end. We're starting to roll over. Do we see a little bit of downside for the time being? Ultimately, these markets that go up and up and up at some point need a breather, much like gold and silver. It's not a bad thing to have a breather because these markets can't go up indefinitely. And certainly when it comes to copper, we haven't necessarily seen that same signal in terms of the breakout against the S&P 500, but I do think it's likely to come at some point. And I think this is going to be a likely bullish theme that's going to be playing out over the course of the coming years as we see demand for copper soar and supply struggle to keep up with it. We're already starting to see these multi-billion-dollar deals. People are struggling, or not struggling, but people are trying to position themselves ahead of it. Everyone realizes this is going to be an absolutely critical material for the years ahead. And so, yes, we're seeing some volatility at the moment. We're seeing maybe some sort of sideways price action coming into play. But I do think as we move forward, this is likely to be a strong theme for investment in particular, but also something that, as you can see here, over the course of the second half of last year, we just saw it going up and up and up. And so, again, I think it'll be a nice trending market. At times, you're going to have potential volatility within that story, right? But you see nice protracted periods of strength. So it's a good market to be watching out for. I hope that's been useful. Make sure to like, subscribe, and follow for more. My name is Josh Mahony, Chief Market Analyst at Scope Markets. Have a great day.